Derrick, good morning, my man. How you doing today?
Good morning. Doing all right. We just got the CPI number coming out, a little bit lighter than expectations. So we got a small pop on that. We'll see what it turns into.
Yes, sir. Sorry to keep you waiting, but had to get to that CPI print. All right. Would love to know, first of all, I guess we just start there. Do you have any thoughts about this particular print? Does this lead to any trades to you or trading ideas for you? How are you kind of digesting this?
So this print, I think the data on it's a little bit stale because you're not really seeing the impact of tariffs yet, right? So I think it's not going to be until we see the main numbers in June that you see whether or not these tariffs really are creating inflation or they're not. There was some speculation that maybe they could seep a little bit into the April numbers, but when you think about that, like de minimis exemption that we got rid of, that didn't happen until the first weekend in May. So you're not going to see those numbers, for example, in this inflation report. So the number came in light. That's good. It's definitely what the market wants. If we can get consistently light inflation numbers, it gives the Fed a little bit more runway to be able to cut potentially a little bit sooner than they would otherwise. But most immediately here, even though we're having a small uptick, I want to see where this settles. And I don't necessarily think it's actionable. Whenever we have an important economic number like we just had, one of my rules that I always do is I pay attention to the starting point of the market before that number hit. So just going with the SPYs as an example, right before this number hit, the SPY was at basically 582.50. So 582.50 is really going to be what I call my starting point. On a very small time frame, if we continue to hold above 582.50, it means I'm better off being long than short. But if for some reason you were to lose that number, you were to lose that starting point, then it means that all of these rushed in buyers and algorithmic buyers are then out of the money. And then a lot of times you can actually see a quick move to the other side. So I always start whenever we have these numbers, let's note the starting point for SPYs, 582.50. Let's note the starting point for the Qs. I'm going to call it 508.50. And let's note the starting point as well for the IWM, which I will call 208.60. So I'm writing those levels down. Again, while we're above it, you're better off being long than short. But if you lose it, that's notable because it means that they would actually be selling good news. And anyone that immediately bought the reaction becomes out of the money and you get a move in the other direction. So that's what I'm looking for initially. That's on the very small time frame though, right? So that's not enough context. We need to think about that in terms of the bigger picture as well. And the bigger picture has this market a bit extended now because yesterday's gap was so big and we closed on highs off of the news from the China-United States tariff pause. So, for me, generally speaking, I don't like chasing extension or chasing after big moves occur. So even though the CPI came out good and we're immediately trading up, it's not something that I would really chase here just because of where we're at on the big picture.
Okay. That was absolutely phenomenal. That was that's even more than I had hoped for when I had asked you that question. Folks, really good stuff there. I did write those levels down. By the way, I don't know if you care at all about this, but you had mentioned 582.50 as being one of those important levels there for the SPY. 582.30 is my calculated 5% pullback level from the all-time highs. So to me, it's no coincidence that we happen to be sitting around that area. There. Let me ask you, so just because that was so in depth there, what do you think it would take for the SPY in particular to set new all-time highs here in 2025?
Oh man, that's a tough one.
I know.
We've had such an incredible move off of lows that we really are only kind of a hair away from all-time highs. Like you said, 5% off all-time highs, more or less where we're trading here, actually a little bit less than that. So it's not that big of a move to get that extra boost higher. I personally think that we are starting to get closer to a shorter term top at this point. So, I mean, look, we have a whole half of a year left, and my bigger picture thought processes can sometimes go out a couple months. They don't typically go out 6 months, a year, 2 years, just because there's so many moving parts. Things change so rapidly, especially in this environment. We get market moving news events seemingly 5 times a day. Could we get back to all-time highs? Sure. Let's get some more trade deals done. Let's get tariffs back down. Let's get tax cuts to happen, and it can get us back to all-time highs. But in the more immediate picture, I think that this really, really big rally that we've had has been caused by two main things. And I've been talking about it for the last several weeks. It's a positioning squeeze combined with headline risk being to the upside. And you combine those two factors, they're just feeding off of each other. It's enabled this market to have an incredible, incredible rally. I mean, forget about where we were on lows on April 7th. It was just Monday 3 weeks ago that the SPY was at 508.50. Now I'm looking at a SPY at 584.
I know, it sucks. I'm sorry for interrupting there, but you're absolutely right. I mean, it has been a wild ride. You made a really good point there too about the run that we've been on, how maybe we're a little overcooked. One of the things that we had talked about yesterday, I think it was actually in the happy hour show, is that we would really like to see the market consolidate here for a little bit, right? We don't necessarily want to see these huge moves up followed by huge moves back down. And then I'd love to see it maybe consolidate around this line here. You want some numbers? Let's say maybe between 578 and 585. I feel like if we consolidate a little bit up there, that would actually kind of reset some of these overbought metrics that we have and maybe give us some runway for those new all-time highs. I love how you tied in some of the macro things in there. I don't think we get all-time highs without some more good macro news. Obviously, the China deal, probably the big one there. Okay. Really good stuff. God, I forgot to even do the read. Trade with Derrick all next week for free in his ProDesk virtual trading forum, May 19th through 23rd. QR code on the screen. Link is in the chat. Derrick, I'm sorry. I got so excited asking you about what you think here. I forgot to go into that. Is there any other, I shouldn't say, is there any other? What other targets are you looking for? What other stocks to trade, setups, anything like that? What are you looking for?
Sure. So in this environment, I really take a top-down approach where I start with the indexes before I look at any individual stock. So I have to have my thought process correct at the index level before I can break it down into any individual names. And going back to the concept of what has brought us higher has been a combination of a positioning squeeze with upside headline risk. I think both of those things are getting close to running out of steam. So it makes me significantly less bullish as we get into this area. Once we got through this first UK deal, just talking about the headline risk first, and then we can talk about positioning risk. Once we got through this UK deal, and then we got the China headline, I don't really know what else is out there from a headline risk perspective that really could boost us further. Everyone knew, like, all right, if we can get something done with China, it's great. If we can start seeing some trade deals done, it's great. But what did UK tell us? UK told us what the baseline is. I don't care how good of an ally you are. I don't care how good of terms you offer. You're not getting tariffs from the United States below 10%. It's not happening. That's what the UK told us. So that's the best case scenario. And I think that the market is starting to price in that best case scenario for many of these trade deals. Then on top of that, over the weekend, the China-US deal was significantly better than pretty much any analyst that I had read expected. A lot of people thought we might come down to like 40% tariffs with China. The number came in significantly lower than that with this 90-day pause. It was a best case scenario. What other headlines are out there that could really, really push this market higher at this point? I'm not sure. I think it's mainly becoming priced in. Two is the positioning squeeze. What happened in April, that movement lower, that volatility that we saw was historic. It exceeded in some ways the degree of volatility, the degree of movement we even saw in COVID, when the entire world shut down. And that forced all the systematic funds out there to liquidate, to be net short, to have zero positioning on. And we've just seen over the course of the last few weeks that they are forced buyers in every scenario. This week, right now, is the first week where the forced buying's not gone, it's beginning to slow down. So they're beginning to run out of this short-term ammo to really boost the market higher. And you can see it. Market structure is one of the most important things, I think, to understanding how to trade. And the way that the market has been trading, you saw it last week. Last week, we did have a little bit of a consolidation week. But midday, every day, there was this really, really strong underlying bid to this market. And we would just kind of go sideways or grind up all day. And then we'd see these quick sell-offs into the close. Why is that? It's because all day there's a systematic bid, and then that systematic bid turns off into the close. So that data is really important, and we're starting to get to the point where that's beginning to run out. Then if you can combine that with maybe some worsening economic numbers that might hit in June as we really see the impact of the tariffs, I actually think that for the first time in this area, we're really starting to see the risks accumulate more to the downside again than the upside. So that's kind of my starting thought process. I'm still, I think, a little bit early trying to be on the bear side, but it's something I'm really starting to pay attention to for a signal, especially as the market really begins to extend up yesterday with the news, and again today with the CPI number that just came down, which we're now actually selling back down a little bit on even as we're talking. So what stocks do I want to go after off that? So now we break it down. Understanding kind of the market thought process, understanding some of the technicals in the market, what I'm beginning to look for there. Now we break it down to what stocks are relatively strong, what stocks are relatively weak, where can I focus on things? Well, right now, semiconductors look fantastic, so it's not necessarily something that you want to be short. NVIDIA broke out through 115. It's also being positively impacted with Trump in Saudi Arabia right now with the potential reopening of some of these semiconductors to them. So those things look phenomenal. How about this Palantir, though? Palantir is an interesting one, right? Palantir, they sold that down off that earnings report after it basically went parabolic into the report. And granted, the report was actually excellent, but the stock was up probably too much into it. And then yesterday it showed a lot of relative weakness as it got into the gap fill. So that's an interesting level to pay attention to. It looks like there's some resistance in Palantir now in this like 120 to 123 area, or maybe I can lean on that to the short side to find some continued resistance if I can get this market to pull back a little bit. So that's an interesting one to pay attention to. What about some of these other Mag 7 stocks? Well, Google looks absolutely horrendous ever since that news came out a handful of trading sessions ago. That's one to keep an eye on for the short side, honestly, as long as it doesn't really get back above 165. 165 is a key level. Back above that, the chart will begin to look really bullish again. Apple's also an interesting one because it's still beneath its 215 resistance. That's a spot to pay attention to. Apple should have performed much better yesterday. That news of the pause with China should directly impact Apple in a very positive way. And it didn't perform as well as I would have expected. And one of my favorite signals in all of trading is when a stock doesn't trade as good as it should on good news. Sometimes it's a signal for the opposite direction. Or when it trades better than it should on bad news, like Tesla has done repeatedly recently, that can sometimes be a signal for the other direction. Tesla, not great earnings report, went up on it. And I think it was last week we had bad news come out on Tesla 3 days in a row, and the stock didn't go down, and the technicals held in great. We saw bad numbers out of Spain, followed by bad numbers out of the UK, followed by bad numbers out of China, and the stock could not downtick. It couldn't break lower, built out this beautiful consolidation between like 270, 275-ish, and 295 on the upside. Then on top of that, this goes back to market dynamics. We started to see a ton of bullish option flow come in. That bullish option flow can create a gamma squeeze that can cause those stocks to rip higher. And lo and behold, Tesla continues to trade great. It's a little bit extended here. I wouldn't chase it because I don't chase price, but that's one to keep an eye on for a reset up for a potential long. Maybe if the market pulls back and you could get a retest of Tesla like 300 to 305, that's something that you could buy.
Let me jump in here real quick on Tesla because this has been a really important move, and I'm really glad that you highlighted all of the things that you just did. We were talking about that too, and the option flow especially. I have actually been watching option flow the last several weeks, and I've noticed a significant tick up there in Tesla. Last time we talked to you, I believe Tesla was a short for you, and you were mentioning that the PE was just too high. Are you still kind of, now that we've had this move up, are you looking for levels that make a little bit more sense to reopen that short, or has that kind of changed just in general?
It's definitely something I'm going to pay attention to because I do think that the stock is expensive. Tesla short is actually one of my best P&L names of the entire calendar year of 2025 so far. I did really, really well with that. But you can't get married to ideas, especially when it comes to fundamentals, because the stock can stay irrational for way longer than I can stay solvent. So do I have like a general bearish take on Tesla because, well, like I just said, we just saw 4 pieces of bad news come out, one after the next after the next. That earnings report from Tesla was not good. They're not selling cars in Europe. They're not selling cars in the UK. They're not selling cars in China. The stock is still expensive. I personally think that Elon did a lot of damage to his brand. Not brain, brand.
Well, he was on Rogan ripping blunts, so maybe that's true also. Anyway.
It's more, and this is not a Republican Democrat thing. It's just politics is bad business. Especially,
no question.
It's like, when it comes to electric vehicles, I've got friends on the right and on the left. My friends who are on the right, they don't want to buy an electric vehicle. My friends who are on the left, they want to buy an electric vehicle as long as Elon Musk didn't sell it to them. So I just see brand erosion there combined with an expensive stock. It makes me not want to be long it, but I'm not shorting good technicals. I'm not shorting a stock that's reacting well on bad news. Like that's just you can be stubborn and lose money, or you can wait until your thesis actually lines up with the technicals and the information to look for a short. So while I've done really well short Tesla this year, it's wait and see mode right now until we get a little bit of a better setup. And if anything, right now it looks for a long, and I've called out several longs in this over the course of the last couple of weeks just off of technical setups.
Okay, for folks, I hope you were paying attention to that Tesla segment because there was so much gold in there. I don't even know what to make of it. Really, really good stuff there, Derrick. Absolutely love all of that. One more stock that I want to ask you about. I think, again, we talked about this last time. I think you were bullish and long on Uber. Correct me if I'm wrong. I'm trying to go from memory here. And I think that you had a robo-taxi thesis along with this. So since then, we've had some more. First of all, since then, Uber has made a massive move to the highs here. Actually, it looks like it broke out of this kind of triple top formation that we have. What is your view here on Uber? Same, changed? How has this evolved?
So I like Uber a lot, and I'm not a pairs trader, but I had basically been calling for a while for a pairs trade that was like long Uber, short Tesla, and for the most part, that's worked out really well. And Uber's continued to hold in like an absolute champion in the big pullback in April. Compared to the market, Uber barely went down. It held in fantastically well. And I just think that they've got such a huge leg up on the robotech. Like, this is another part of the bull thesis on Tesla that I don't necessarily subscribe to. If you're a bull on Tesla, you're basically pointing towards businesses that Tesla is going to have that haven't even started yet, and saying that these are going to be the revolutionary businesses that justify their PE. But it's like you're acting like there's not going to be competition for robots. You're acting like there's not going to be competition for robo-taxis. And when it comes to an infrastructure for ride hailing, Uber's already got the infrastructure. Everybody's already got that on the app. You're going to have to download an entire new Tesla app to get the Tesla ride. And I'm sure a lot of people are going to do that. But Tesla's going to have to spend a lot of money to catch up to the moat that Uber has built for themselves. And then there's the whole logistics part of, like, what happens if someone is drunk and gets sick in the back seat of that robo taxi? Well, Uber's already got that infrastructure fully built out. Tesla has to build all of that or buy into something else. I actually think that Tesla should buy out Lyft. I don't know if they can afford to do it, but I think that would be a great acquisition. Lyft has been so beaten up. They're the secondary player, but they already have that infrastructure. People already have the app. Like, I think that would be a phenomenal buy for Tesla if they can afford to do it. I haven't done any research beyond just the concept of the symmetries there. But Uber still looks great too.
So I actually have something to add slightly to that Tesla Lyft thing. I actually think you're spot on with that. I think I did not expect you to say that. That's a great call. We saw back in March, we saw some pretty extreme upside call buying on Lyft through the unusual option flow. And I believe they were the 20 calls. And my thought at the time was, this looks to me like somebody knows there's a deal happening. I obviously didn't have, any insight into that at all. Your Tesla idea here makes a lot of sense, right? Imagine the amount of data that Tesla would be able to take from the Lyft acquisition and what they'd be able to do with robo-taxi and full self-driving. That to me makes a lot of sense. We'll see if we end up getting that there. Okay. Really good stuff. Was there anything else that you wanted to cover that maybe I didn't ask you about here? This has been absolutely fantastic, Derrick.
I think we mainly covered the main points on my end, and I appreciate you having me like always.
Okay, sounds good. Trade with Derrick all next week for free in his Pro Desk virtual trading floor, May 19th through 23rd. Give that QR code a scan. The link is in the description. Derrick, again, thanks so much. Have a great rest of your day here. We'll catch up with you next time, all right?